Hello guys, welcome back to another video from mykayaplus. So my name is Yupan and together with me is Chunbeng. So I think we are in a special period right now where the word inflation keeps appearing in our lives. So we see it not only in the news headlines, your social media, or even in the corner of the mouths of the people that you might be talking to, be it your friends, families, and even your relatives. So I think most of us kind of get to understand the gist of what inflation is, but to be very frank, inflation is actually good in a certain extent if you look at it from another side of the coin. But most of us tend to actually focus only on the bad side or the downsides of inflation. But what about you, Junbei? During such period of time, where do you tend to focus more, which is whether the good side of inflation or the bad side of inflation?
Generally speaking, I think inflation is good to promote the growth of economy. But of course, during period like this, it can be bad because inflation coming together with interest rates. It can be very, very bad for normal working adults because the cost of borrowing is going up. The living style that he need to maintain to buy foods and whatnot is also going up, can be very, very tough. So that's why I think this is a special period. That's why we come up with the videos to actually share with you in period like this, what is the better place for you to actually place your money theoretically. So that's why we hope this video actually can give you some insights.
Yep. So I think to further understand inflation, actually we have already written an article on it. We will include the article link into our caption below. You can actually check it out, get a full understanding on the good and bad of inflation, and then only try to come out with solutions, which is probably what we will touch more on this video. Then again, what we might be sharing with you is just a personal opinion. It's just what we think might actually help. We are not by any means any professionals in economics or even in investment related advisors, but these are the so-called solutions that we, some of them, might also personally practice and indulge in, but it's just going to be served as a white-based opinion to you. Do not take it as any investment advice. Do your due diligence before you actually pick one of the upcoming factors or solutions that we might be introducing. So how to actually invest and what to invest during this inflation period, what could be the first one?
Yeah, I think this might be the very old sayings when during hard time periods, you keep your cash. But of course, when we talk about a period like this, there's also multiple options when we talk about keeping cash. While you can actually choose the stronger fiat currency, for example, USDs, why don't just store your money over there compared to, let's say, ringgits? Could be on the weaker side of things. So that's why if you don't have any extensive knowledge or you don't have time to actually do a lot of due diligence when we wanted to do any investments, keeping cash is one of the options. But of course, within cash, you have plenty of choice to go to. So that's why the very bare minimum is you can always go with the stronger fiat currency at this time, right? But of course, if you have time and you have some sort of extra cash to invest during time like this, maybe the second one that you can put into your consideration is somewhat, we call it like the tangible asset. Because let's say we earn in ringgits, your wages remain the same, everything goes up. So what you wanted to do is basically buy something that at least the value remain the same throughout the inflation periods. So in this case, for example, you have a house with you, everything goes up. Technically, your rentals can also go up if basically you own the properties. So in this case, this tangible asset can actually preserve the value for you, not by actually appreciating the value from time to time. It's basically the dollar become weaker, the currency become weaker, then all these things remain the same. That's why it's a slightly better option. But of course, from a investment point of view, instead of going for preservation of value, maybe the third option is a better one for you. Maybe I'll pass it to Chupan to share his opinion on this.
Yeah, I think after going through the bare minimum, which is to switch your currencies to from a weaker, relatively weaker currencies to a stronger one, or even looking into tangible assets to further strengthen and preserve the value. The next frontier that you can actually consider is actually to put your money into productive assets. So productive assets can be a very large category or large umbrella, but one of the easier to implement ones would be actually stocks. And you might be very surprised that during such period of times, why should you still consider stocks? So in the grand scheme of things, there are businesses out there, business models out there, or companies out there that run businesses that are actually inflation proof. Meaning to say that yes, things or prices can be going up. They might be also buying their materials at a higher price, higher cost, but they also have the power to pass over this higher cost to the consumers. So be it the food products that you buy from your groceries or supermarkets, which you personally might have experienced the higher adjusted prices. When you look back to the financial statements of these companies, they might not be actually being really affected by inflation of the raw materials and prices, but as the end consumers, we are the ones who are actually being affected, having to fork out additional money to buy the same product as an inflation period kicks in. But then again, not all companies are considered inflationary proof kind of business models. There are also companies out there that might not be favorable during such a period of times. So these might be your hyper growth companies that might be growing at a very fast rate, but they require capital to grow during this period of time as well. And since interest rates are going up, they definitely need to fork out additional interest expenses going forward, and the so-called discounted cash flow valuation from a future value perspective until a net present value perspective can also be distorted. Hence, you see most of the hyper growth stocks are being priced down significantly today after the Feds actually changed their stance to become more hawkish and become more interest rate increasing stance. So I think that's a very layman point on how to view productive assets as a subcategory to actually protect your wealth and even grow your wealth during such inflationary periods of time. But I think, last being said, the most important aspect that I think that can actually help you to preserve and grow your wealth during whatever kinds of senior situations are actually to invest in yourself. So of all the three so-called tangible solutions that we have offered right here, not one can be the most optimum and not one can actually be the best solutions out there. It can actually be a mix of allocating some of your assets to fiat, some to tangible assets, and some to productive assets. But deep down inside, you yourself need to know that what is your risk tolerance as well, what is also your risk appetite, and how can you actually either just focus on one subcategory or even mix around and play around with these three solutions that we have been sharing with you today, right? So anything to add on top of that, Chun Bing? What are your maybe personal preferences when it comes to hedging your wealth or preserving your wealth or even growing your wealth during inflationary periods?
I think the worst thing that you can do is do nothing and then just working hard at your workspace, getting the same salary or maybe you get increments. But regardless, inflation is there. Your currency may not worth the same the next year. It will worth less. So that's why you got to choose one of these to at least preserve your wealth. Not like you're working for nothing. Basically, you earn 100 today, and then it's worth 90 next year. Then it's a bit meaningless for all your hard-earned wages go into like this. So that's why when you go into this, really need to take a step back and then think about your own risk appetites, and then just need to make sure what is more suitable for you. And then, of course, for me myself, I think invest in stock markets is maybe one of the good options for me personally. But of course, how to screen the company is one of the other things that you need to put a lot of effort. In short, maybe you need to find the company that has the pricing factor. They can actually determine the price. Maybe they are monopolying the market or whatnot. Second one is they don't need a lot of cash during period like this to actually stay relevant or even for growth. So I think this is what we wanted to share today. Hopefully it's something beneficial for you. If you have any question on what to cover more during period like this, feel free to put it inside the comment section. And if you like this content, please give us a thumbs up and also share the video out in the social medias.
Yep. So of course, if you are someone new to the market, you just happen to chance across this video and you really don't know what to do, but you are actually afraid of your wealth being deteriorated by the devaluation of a currency, you can actually choose to, as I said, invest in yourselves. But if you are not sure on where to go, you can actually head to our subscription services, which is the premium club members that we are actually offering our so-called services in terms of stock analysis, in terms of premium articles, in terms of some basic economic outlook and perspectives on the general market. You can actually sign up in the link that is provided in the caption below. Of course, if you do have any other questions regarding on a multitude of things, you can also let us know in the comment section down below, and we will try our very best to revert to you. But that's it for today. I hope you find this video informative and you are able to increase your knowledge and understanding on what to do and what is inflation all about. We'll see you in the next video. Take care. Bye bye.